Welcome to a glorious red day. Now, obviously, lately, there's been a lot of volatility. And of course, people in the community, people on YouTube always ask the questions of how you buy stocks during market chaos, especially with everything going on with Iran right now. Every night, it's oil's up 20%, oil's down 20%, oil's up 8,000%, now it's down 8,000%. So today, what I'm going to do, I'm going to show you how I buy stocks during times of volatility, not just physically buying the stocks, but also mentally and emotionally, because that really is the most important part at investing. So we're not only going to do that, we're going to look at a few potential opportunities. And I'm going to show you guys a stock that's fallen recently that is on my radar right now. It is one of my 30 stocks that I want to own forever. Now, what stock is that? Anyone want to guess? Sure, it's Intuit. Now, guys, I love Intuit. I use QuickBooks Online. I think it's one of the, what did I just do? I just clicked on an article. I think QuickBooks is one of the best accounting software for so many small businesses. It is wonderful. We used to have the desktop version, then they created the online version, which is fabulous because now you get all the updates. Yes, you pay per month now, but it's well worth the charge. The stock's currently at $4.39. Guys, look at this. Year to date, it is down 30%, and it's not even at its lows here. Its lows here year to date was at $3.49. That is incredible. $3.49. The all-time high was last July, $8.13. Guys, make note of this. July 30th to February 23rd, it went from $8.13 to $3.49. This is a business that generates $6.5 billion a year in free cash flow. Why? Are people sitting there worried about AI taking over accounting jobs? Maybe so. But this is a company with decent returns on capital, not a ton. Oh, look what a pretty face that is. Decent return. 12% return on capital in the last year, 10% a year for the last 5 years. Not huge, but things I love about it is their free cash flow is greater than net income. Adobe has the same thing. Adobe's is much greater in terms of percentage, but this is still very good. $6.35 billion versus $4 billion last year, and $4.6 billion 5-year average versus $2.7 billion on net income. If you recall, free cash flow and net income over a long period of time should be equal. Most companies, when there's a difference, net income is greater than free cash flow. I love this way because everybody always looks at PE, not price to free cash flow. So I think this could be a hidden treasure here. Hidden treasure here for Intuit. They have $9 billion in acquisitions over the last 5 years, which is a good chunk. But look at this growth rate in their revenue. 13.5% a year for the last 3 years, 20% a year for the last 5 years, 16% a year for the last 10 years. Good stuff happening here. Our community members have it as a buy with an average intrinsic value of $619. Guys, look at this. It's actually not even an 8-pillar thriller. But again, I'm not worried about it because the shares outstanding is up a little bit. It's not a ton. Hopefully that changes here soon. But their price to free cash flow and their PE for the last 5 years. But again, their free cash flow is up almost 50% in the last 5 years versus their 5-year average. And their net income is also up 50% from its 5-year average. So that's really, really good stuff to build on. Now, again, we have the question of AI. Will all of a sudden AI take over accounting? Guys, here's my take. Just like Adobe, I feel like AI will enhance these companies. These companies will bring AI in there. So even if there's an effect on accounting from AI, I have to think that Intuit will be on the forefront of that. Especially if their CEOs, their executives see their stock falling so much, they're gonna be like, listen, let's get on the forefront of AI. So let's see what analysts have to say about this company. Here's what's interesting. $23 per share in earnings, growing to $41 in the next 4 years. That is big time growth. That's like 80% growth. 80% growth in the next, that's insane. And revenue growth, double digits. So, is this an opportunity there? Well, here's where we put the story and the numbers together to kind of do an idea of where we stand. I'm not saying it's the best. Let's see here. I went very conservative here, guys. I went 10-year analysis, 5, 8, and 11% revenue growth. I did profit margin and free cash flow. I'm focusing on free cash flow here, 28, 30, and 32. PE for 10 years from now. The market average is 15 or 16. You go higher for good companies, lower for bad companies, 18, 21, and 24. And my 9% intrinsic value, no margin of safety return. Obviously, I will not buy at this price, but I just want to see what do I think it's worth based on my assumptions. Guys, I have a low price of $385 based on free cash flow, high price of $855, middle price of $575. Now, I look at this thinking to myself, I kind of like this. I kind of do like this, but for me personally, and this is what I got to remind everybody, the Morgan Housel quote, personal finance is more personal than finance. I have a lot of apartments. I have several businesses. I've got cash. Only 30% of my net worth is in cash or stock. So for me, I don't need to buy everything at a 12% return. For me personally, and this is just me, I'm not telling you to be the same way. I want 15% return soon, basically, for my stock. So I look at it going, what price do I need Intuit at to make a 15% return? So I'm going to change my desired return to 15%. And it says 370 right now. That's the price I would need to get a 15% return. Okay. So what I'm going to do now is I'm going to go to our options chain. And because of the volatility, I can do what's called sell cash secured puts. This allows me to buy stocks I want at lower prices and get paid to do it. So from April 17th, I pick a date in the future. April 17th, guys, look at this. I can sell a 370 strike price and get $6.45 per share, which is a 17.5% annualized return. What that means is on April 17th, if the stock is above 370, I don't get the shares, but I get $6.45. It moved. If it goes below 370, I still keep my 645, but I pay 370 for the stock. So I essentially pay 370 minus my $6.50. We're at $363.50. That's what I pay for the stock. That's the power of what I'm doing with the volatility. If the market was always flat and consistent, this would not be as high a premium. But guys, I'm now able to buy this company. And actually, funny thing is, Dalton is watching. Hey, Dalton. Make note. Let's. And by the way, guys, don't do anything because I'm doing it. This is very, very important. I'm here to teach a process. Dalton, let's sell 370 puts from April 17th for Intuit. What do you think?
On it.
So put it together and I'm going to do it right now. I'm going to text you how many contracts I want. Okay. I'm going to text them right now.
I'll put the email together.
Perfect. Guys, the reason I'm doing this is I like generating income on my cash. I'm able to get 17.5% return. It's just a great way for me to sit there and get stock that I want at a lower price. If you told me right now, Paul, Intuit was at $370 a share, I'd be like, yeah, I'm buying it today. So why wouldn't I go out there and do that? And then, by the way, that's at a 15% return based on my assumptions. This is where the power of this all goes together. So let's look at some of the comments. Are there any comments so far on this? Well, by the way, the market is down today. The market is down the NASDAQ is down 1.34%. Let's go. But guys, you've seen what's happened. Like, it was a joke this morning. I said, all right, guys, the market's down. Let's hope this thing keeps going. We really do believe that on this channel.
I feel like it's Christmas, but you take my presents from under the tree and throw them in the fireplace and like burn them. And that's what happens when the market goes up the next day.
That's a really, really good analogy, Tim. It's like, oh, that's great. Like, oh, hey, Tim, see these gifts we got for you?
Like, I got you these new AirPods. F you.
Scam.
Throw them in the trash.
By the way, I bought Daniel AirPods. His birthday's coming up next week. We bought him AirPods, and his girlfriend texted us and goes, hey, I just got Daniel AirPods. So we're like, yeah, time to return them. Isn't that, so you mentioned AirPods. But I think those are the AirPods that will translate for you,
dude,
correct?
That's epic.
Do you have them?
I don't have them, but I heard, Apple like demoed.
Well, it's funny because Daniel's girlfriend is Mexican, and he's going to Mexico at the end of this month to see her family, and they don't speak a lick of English down there for them. So I'm like,
that's gonna be epic.
Yeah, so Daniel's gonna be able to use his AirPods, and
I think of was it Elaine in Seinfeld?
Yeah,
in front of the nail person, and she brought George's dad, right?
Yeah, Frank Costanza,
and be like that.
That was great. Yeah. After tax time, that's what you think. That's when stocks will go down. Gotcha. All right. So guys, I think it's a great company. I look at this balance sheet and I look at their cash flow, $6.35 billion. If they're able to grow that with essentially $10 billion in debt right now, net debt, that's great. And they have a great product. And it's funny. I've only met one person ever who said they didn't like QuickBooks. And this was this super accounting, elitist snob, which I don't even know how you could be that way. But I'm like, listen, not everything has to be a Ferrari. Are there better programs than QuickBooks out there? Sure, but not for small business owners. Guys, I love QuickBooks so much. My budget for my wife and I is run through QuickBooks. Like, I have a personal QuickBooks account that I operate our life like we're a company. I have a balance sheet. Money comes in. I have it as income. I have our expenses. I reconcile our personal accounts every day. I think QuickBooks is phenomenal. I just think it's such a great, great tool, and it's only going to get better in my opinion. That's what I think here. And by the way, look at this. What was my intrinsic value on the company? My intrinsic value was, let's go back to 9% here. Our community members had it at 630. I have 575, a little bit lower than our community members, but I also put in a lower revenue growth assumption than the analysts had. The analysts had above this for the next 4 or 5 years, above 11%. Isn't that incredible? All right, so going back to the markets here. You look at what's going on. Markets are down. What's this number one article? 15 stocks with the most short squeeze potential. Now, a short squeeze is where a lot of people are shorting a company, and then you basically get people to get maxed out of it because everybody buys it, it goes up, so people have to sit there and get out of their short position. Let's see. The war in Iran may upend Brazil central bank's plan to cut rates. Yeah. Well, so George just asked a question. Would you ever consider Delta Airlines or Love once things calm down geopolitically? George, you're obviously new to the channel because I own Southwest. I've been an advocate for Southwest. I think my basis is $29 or $30 a share. Doesn't mean that you should do it. But my thesis on Southwest is this. Oh, wow, it's below 40 again. That's great. My thesis on Southwest is this. The profit margin is currently 1.57%. Before COVID, it was consistently 10 to 15%. It's purely a margin play. Purely a margin play. That's it. Now, are there issues with Southwest? For sure. They just changed their rules on seating. A friend of mine took Southwest on a trip recently. He said this is the new Spirit Airlines. Who knows? A friend of mine's wife works for Southwest. I was talking to them last night, and I said, how's the transition going? She said, it's a little bumpy. We got to get better at it, but it's working out well. And look who's here. Sam, I am. What's going on, man? Thanks for joining us.
Paul, why Southwest over Delta or American?
I think Southwest is a much better run airline. They do a great job of hedging. They stay consistent with the same airplane, efficient routes. I know it sounds crazy. They never had a bankruptcy and since they've been a company. Delta and American just have these issues with that. I do think Southwest is the better airline. They don't operate like an airline. Everybody else in the airline business, I feel, wants to be bigger and bigger and bigger and bigger versus better and better and better. I feel like Southwest is the exception to that. David Stein, what do you think about SaaS companies being down so much? Remember, guys, SaaS means some software as a service. People who sell software, things like Salesforce or Intuit. I mean, everybody thinks that AI is going to replace all these companies. So that's why they're all beaten down. Could this be an opportunity? Listen, I have a hard time believing that if you have 30 SaaS businesses, that they're all going to zero because of artificial intelligence. That's my opinion. Whether I'm right or wrong is different. What was that? And by the way, I think they'll all be affected in some fashion, but people act like they're on their own little island where they can't change their business as time goes on, right? Look at Microsoft. Microsoft fought the whole mobile phone thing for a long time and the iPhone thing for a long time.
And remember when we did that video a few weeks ago, that was it the GM? I think it might have been the GM CEO, and Sam, you probably recall, that said we'll have a paperless society in a couple years.
It was GM CEO.
And that hasn't happened.
But is paper down? Yeah, exactly.
Yeah, paper's down
exactly.
But it's, again, overestimating the impact it's going to have. And I think you see that with every major innovation that's ever happened.
Yeah, what were they saying about the internet back in the day? I even told Lisa the other day. So Lisa and I were talking. And she's like, well, what do you think artificial intelligence will play? I'm like, Lisa, let me ask you a question. I'm like, do you stop shopping? She goes, no. I'm like, don't you like going to the stores? I'm like, Lisa and I love going shopping. We love doing I said to her, listen, where do we like shopping the most? Our luxury brands. I'm like, has it affected lower end? Absolutely. But at the end of the day, people still want human interaction. There's still that thing. When I go on customer service now, the first thing I say is human. We have a company. My stepson has a mobile detailing business in Dallas. So if you're in Dallas, Texas, you want your car detailed, give us a call. But he has a mobile detailing business. We get a lot of leads. We hired a company to handle the AI for them. We didn't get a single sale because people didn't want to talk to them. Doesn't mean it's not going to change, because over time they'll get better. But I remember hearing the first recording and I go to my sales guy, I go, Dave, this sounds like a robot. He goes, I know, but you'll be surprised. And I think he made a good point. He said to me the other day, I said to him, like, listen, it's not working. He goes, listen, I think if somebody's used to you, like they call the same pizza place all the time, the same place, they know what they're getting, it would work. But this one, maybe not.
I think the only people that want to talk to AI are like the crazy people, like the lady that said she was in love with Luigi's AI bot or whatever. That was at the trial one. She said,
Oh
we're
my
married.
gosh.
Like, yeah, those are the ones who want to talk to AI.
Yeah. Hey, Paul, what's your thought on Duolingo? First off, I use Duolingo. My current, if you want to show everybody my current streak on Duolingo is 2,434 days. Let's see, is there anything private on there that we can see now? 2,434 day, but I do it just to keep the thing going. I love Spanish, but those AirPods we were talking about, like, guys, that's where I actually think, like, people still want to learn. But at the end of the day, if I could put on AirPods and I go to another country and somebody else has AirPods that's translating us, why would I love the idea of understanding a language, a new language. I love the fact that I can, go to a Spanish-speaking country and know that nothing's going to happen to us because I know I'm going to be able to get us places. And when I was single, and I went to Mexico to one of our houses that we rent out, and I'd get on like Bumble, every girl was like, what part of Mexico are you from? I'm like, I'm not from Mexico, I'm from the States. And they were impressed, like, oh my God, you're now granted, my typing of Spanish is a lot better than my speaking because it's that nervousness. But the point is, I love learning another language. It was fun for me. But at the end of the day, the shortest distance between two spots is a straight line. And if AirPods can make that a lot easier, some point, yeah. How do I think private equity complications are going to impact the market in Q2? Don't say the too hard file. It's too hard pile, and that's TOO, by the way. Yeah, I know.
Same person brought up Beechwood Mall right after that. Did you see that?
Same guy?
Yeah.
Beechwood Mall, shop at Apple.
Oh, are you from Cleveland? Is he from Cleveland? By the way, Beechwood just lost Saks.
Yep.
We like Eaton. I was at Eaton this weekend with my wife. We were,
I love Eaton.
Yeah, Eaton's nice. First off, I don't understand the private equity credit complication market. So yes, too hard pile. But secondly, even without that, couldn't care less. What do you care what happens in Q2? Who cares? Are you a long-term investor? Are you a long-term investor? If you're a long-term investor, you should hope that it buries the market.
Yeah, correct. Hope that it temporarily impacts major financial restructuring or something like that, causes a significant dip in the stock price. You look out at the long term, cash flow is going to go back to...
Guys, in 08 and 09, our financial system almost came to a halt. Look at our stock market now. Even from the peak in 07, we're still 4 times greater than we were back then.
Most of the companies who were majorly impacted back then. I mean, if you look at most of the major banks, that was when Berkshire and Buffett were
buying like
building
crazy
positions.
And their stock price was like 80,000. Okay, so I'm going to look at Duolingo because it was requested. Our community members have it as a buy. 230. Wow, look at this, guys. Look at our community members. They have an intrinsic value of 237 on this. And look where the stock price is. Oh, Dallas. So where do I like to shop in Dallas, by the way? I like to shop at Highland Park Village, Galleria, and North Park Mall. All high-end shopping. Anything for low end, I'm just going online. I just go online and go, Amazon, done. You know what I mean?
Yep.
And by the way, Galleria has some regular stores too. Highland Park Village is awesome. Have you guys seen Highland Park Village? Why are you smiling, Justin? Because I like shopping. I'm one of the few guys in the world who likes shopping.
I really thoroughly enjoy shopping.
It's the best.
I think Galleria was the only mall I went to in Dallas with you. Is that where we went to dinner? That place? Was it Galleria?
Was it North Italia?
The Italian restaurant?
Yes,
yeah.
it was Galleria.
That's a really nice mall.
Yeah, it's great. And they're opening, and they have great stores in there.
Huge mall, too.
Yeah, it's very large. But Highland Park Village, I'm going to show you guys Highland Park Village real quick.
I was in Dallas, Fort Worth. I flew into Dallas, Fort Worth for a wedding, but I was in Fort Worth. I was in downtown Fort Worth, not downtown Dallas.
Different environment in Dallas.
I had a good time, though.
Oh, it's great. Here's Highland Park Village. It is awesome. Look at this shot. Look at this. Oh, it's so great.
You could lose me for a couple days in there.
100, like literally 100%.
They have any watch stores or boutiques in there?
Oh, yeah. Well, that was where the dickhead. I want to say this. I have a Google review for this guy. I went to the Audemars Piguet store. I walk in with my stepson. There's a guy working there and 2 nice ladies. The ladies I've like talked to in the past, the guy's sitting there like a hard ass on his laptop. So I'm walking past, he's like, can I help you? I'm like, yeah, I'm just, do you guys have any like Royal Oaks, basic Royal Oaks? He goes, you and everybody else wants one. I'm like, all right, cool. Like, I get it. I'm sure it's a hard one to get, but like, he goes, I've got some other, you have to buy some other watches. Maybe we could get you one. I go, cool. What do you have? He's like, well, what are you looking for? I'm like, I don't know. I'm just open. And he said some things. I'm like, well, I already have a lot of watches like that, but I'll take a look. He goes, no, I'm not going to bring it out. I go, Daniel like looks at me. I go, you're not going to bring it out? He's like, no. He's like, you're probably going to scratch it. And I don't want to scratch it if you're not going to buy it. And I was just like, what a fucking sack of shit. So I left and literally walked out the door. I went right to Google reviews and I wrote on there, like, the guy was named Nick. He worked at, I still remember this. I've gotten so many likes on that review.
Yeah, it wasn't just an issue with you. There was probably 100 other people before you.
And I'm not trying to be a cock, a dick. I have 30 watches, like, and they're all high-end watches.
Don't you have gloves? Don't they have gloves?
Yeah.
Yeah, they have a bunch.
By the way, I've never, ever.
That's stupid.
I've literally been in a Richard Mille store and they said, hey, do you want to try this watch on? And that's a fucking $750,000 watch.
I'm 23 years old, and when I asked to try on a $13,000 watch, nobody says, like, you might, I don't want to bring it out, you might scratch it.
And I'm not trying to be a snob, but I was like, dude, relax. So anyways, I can't wait to, anyways, Vegas is awesome. Okay, so this is Highland Park. What was I talking about? Duolingo, sorry. Okay, so let's go look at analyst estimates for Duolingo. Not a lot there.
Oh, you have somebody who has cars for your stepson.
Oh, that's great. Yeah, North Park is great. How do I get a hold of him? Tell him to email help at, hey, can you email help at everything money? Yep. And I'll get a detail for you. Thank you. That's very kind of you. I'll give you a discount, everything money discount. So the thing about Duolingo is,
Analysts just made a revision on their earnings estimates recently.
Well, clearly that's a big drop.
43%.
And if you take the 552 and give it a 20x multiple, it's a $110 stock. I'm interested to figure out how our average community member has this as an intrinsic value of 237. That's a lot. Good balance sheet, it seems. Their net income and free cash flow are very far apart. But that could have to do with, do I hear a lot of vibrating? Oh, that's weird. Like, what's the future of Duolingo? They just went public how long ago? Oh, Teddy, Cleveland. Yeah, that's a good one. They just went public in 2021. Guys, they're at the same price. They're lower than the price they went public at. Look at this run up. They went up to $500 a share just last year, less than a year ago. Guys, look at this. $545 a share back in May of last year. February 27th, $92 a share.
Yeah. So that would mean you would have, if say the community intrinsic value was a fair assessment, you would have traded at twice fair value, and then
now way less than half.
It's almost a third, basically, of intrinsic value, all in the course of a year, basically. So
guys, let me ask you a question. I'll bring it back to one of the first questions asked about, because you guys know how I feel about this. About who here, and be honest with me, write yes if you're worried about the current geopolitical problems and how it affects your money in the long run. I really want to hear that. Just write yes if you are. Oh, Romania, that's where my cousin was born. Write yes if you are worried about this, because, one of the things I want to teach people is I want everybody to realize that we can't say we're long-term investors, but we're focused on short-term issues. Doesn't mean a short-term issue couldn't become a long-term issue. But even look at, oh, good, there's one no. But even look at the great financial crisis of 2008. Okay, yes, thank you, George, for the honesty. Nope, from Forrest. I look at what happened in the great financial crisis. And if Michael Burry had come and said, hey, we have a big looming blah, 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 current Paul would have said, don't care. And the reason I would have said don't care is I'm not saying it's not a problem. What I'm saying is it will not be a problem 10, 15, 20 years from now. Ironically, the problem that is big is valuation. That will directly affect your long-term returns and your long-term behavior if you don't know how to handle valuations. Oh, of course, Arlen's not worried about it. He's the man. Not at all. I trust history. Good. Oh, yeah. Well, Israel. Wow. I live in Israel. No, but I'm not selling. Define long-term. 10, 20. Well, that's the thing. What is your long-term? That's another question. Like, a lot of people I hear say, like, oh, my long-term's a year. I'm like, that's not long-term. I was like, long term is not a year to me. Long term to me is, I can actually get behind 5 years, 10 years or more. My wife the other day, we were having a discussion about something, about our budget, about our, I love talking to my wife about budgets, because she's now come on my side of the aisle on budgets. But she said, man, you really don't care about like what happens next year. I'm like, I really don't. She's like, every time you talk, you're like, well, 20 years from now, I'm just like, yeah, that's what I care about. Whenever I make a decision is, I have these 5 Airbnbs and upstairs, the guy who runs them is in town and we're talking and I go, yeah, I don't care about that. But then when it comes to recurring $50 a month cost, I'll say like, hey, this is a forever cost. Do we need this? Versus, hey, Paul, this is $500. Okay, great. It's a one-time cost. It gets rid of a problem, move on. I really do think in terms of how much is it going to affect the business down the line. $50 a month's not a big deal. You do it 40, 50, 60 times, it adds up to a big deal. That's where I come from. You know what I mean? That's where I'm programmed. There's a plus side of that. There's a downside of that. The plus side of that is I can really get rid of a lot of noise and sleep well at night. The downside is if I start to feel cracks in things that I think could affect the long-term permanently, I have a problem. Like whenever I do my retirement calculator and my analysis on that, I look at it going, yeah, if I make 5 or 6% returns, I'll never need to worry about money. Great. But if I had to get 12% returns, that would affect me greatly going, oh shit, I got to get 12% returns. I can do that with real estate, but with stocks, that's going to be harder. Those are the things that I look at. I'm glad you guys are saying no a lot because it's easy to say that, by the way. I want everybody to be aware that it's easy to say that when stocks are up. And even if it ends up becoming a yes, when stocks go down, we're the place for you. We're the place you guys need to be at to understand these things. Go ahead, Tim.
What about the short term? Conway just asked that question.
If you're retired.
If you're retired, then I would sit there and ask you the question of how much should you have in stocks right now? Like whenever if you're 100% stocks and you're retired, I'd say, hey, what's more important to you? Like if I decided I was 65 years old and I wanted to retire and I said, okay, my goal is to have 50 times my annual expenses in an account. And let's say I had 55 times my annual expenses. Have I hit my goal? Yeah, I've hit my goal. So my comment is, if this goes to 70, am I going to be better off? No. But if this goes to 30, I might be like, oh boy. So the question you have to ask yourself is this worth more than losing this? And that's what we're all trying to figure out. That's what a lot of people, especially in the tail end of a bull market, might think about is going, okay, I have enough in retirement. Then I would ask you, what's more important? A little bit more money or protecting the downside? That's the big thing. And Iran, if it's going to be a big problem for you that you can't retire, I would seriously question what you're invested in and why. And that's the whole idea. And by the way, it's my new favorite quote: personal finance is more personal than finance. Yes, overall, in the long run, you shouldn't care about Iran. But if you're 65 years old and you're just retired and you have exactly how much money you need to live the rest of your life, you should not. I would just strongly encourage you to look at what you own and say, make sure that it fits with your long-term goals. If I could guarantee a 6% return, I'd never worry about money either. Yeah, I think you could with real estate, especially that's a lot of work. But yeah, I'm not worried about it. It was funny. I once asked, oh, wow, look at that. Retired for 4 years, 100% in stocks, been trading options for income for 6 years, sorry. Great. That's a lot. Dan from Cali here. Can you look at TLT for short, midterm, or I don't remember. What's INOC?
TLT is bonds.
I can't look at this company. It's too small. 3.6 million. There's no way. We have to do over $2 billion companies.
Which company?
Sorry, Dan. INOC. Isn't it INOC?
Is it IONQ or is it not IONQ?
Or is it LNOQ?
Oh, I don't know. I have IONQ, and that's a $10 billion company on $79 million in revenue.
Wait, INOQ?
Oh, I had IONQ. Is that not it? Is it?
Either way. I'm 90 stocks to bonds plus a paid off duplex I live in and rent. That's great. Listen, I think about things sometimes, and I like talking about personal finance and numbers because I just think it's a great way of thinking. And I once asked Sam and Dalton, like, what would you guys assume my returns are going to be, including my businesses, real estate, and stocks for the rest of my life? And they both said the same thing, like 12 to, I think Sam said 12. I think Dalton said maybe a little bit higher. And I go, yeah, I assume like 6%. And they're like, are you kidding? I'm like, no, I just assume 6%. And for me, the reason that works for me is it allows me to then be pickier. We just did Intuit. You weren't here for Intuit. I was
watching.
Oh, you were?
Yeah,
so I did a 15% return because to me, I'm like, if I don't need, I want to buy these large cap companies when they're just a screaming deal. And to me, 15% IRR is a screaming deal on a large
of that quality. Absolutely.
Yes. $50 billion plus companies, like even more, even $10 billion plus companies, like 15% IRR. And by the way, I thought my assumptions were conservative.
Yeah, and for a decade as well. In most of your assumptions, you're talking a decade. If you're talking 3 years, 15% IRR, it's not nearly as conservative.
By the way, let's see what this is. Let's go to Intuit. Let's do a 20-year analysis at 15%.
If you could deploy into Intuit at a 12.5 to 13% return for 20 years in that quality of a business, it'd be incredible.
I bet you I can. 347 is my 15% return on Intuit for a 15% IRR over 20 years. 347. We're not that far off, guys. We're not that far off. The low of the stock was 349. It got there, basically. So for me, that's the way I look at things. I look at income. Well, I texted Dalton this morning. Dalton came to me last year. Oh, look at that. 15. Somebody who's watching this video liked my review of the Audemars Piguet. Thank you, whoever's watching this video.
That's dedication.
That is dedication. Dalton, I texted, so about a year and a half ago, I said, Dalton, I just want to hear your opinion. What would you do if you were me? And because Dalton knows my situation very thoroughly, don't you, Dalton? Let's get Dalton off. Dalton, are you still muted?
Nope, I'm right here.
So, Dalton, you know my situation very well. I'm very open with you about money and all that stuff, right?
Yeah.
Yeah, so I said to him, Dalton, if you were me, what would you do? And he said, funny thing was, he said, Paul, SCHD. He goes, and then if you want growth down the road, because I said to him, I wanted to add QQQ down the road when it was much more reasonably priced. And then I texted Sam and Dalton today privately and said, guys, what do you think a reasonable PE long-term for QQQ would be? But Dalton was just like, Paul, your goals are met with the dividend would get you your goals. So just do that. And I was like, yeah, great. And that's not maximizing my return. And it still allows me to go buy companies that I want and not have to rely on them to sell them to live my lifestyle. So these are the things that, as you get closer to retirement, you have to start thinking about. D-Fresh or whatever his name was said he's 100% stocks. I don't know his situation. Like, is he so fabulously wealthy and he spends very little? Like, my old chess coach, friend of mine, Matt, he used to say to me, Paul, like his goal was to retire early, and he's done well. But he looks at my money and goes, why haven't you retired yet? I'm like, because I like working, for one thing. I actually like doing this. And two, I also spend like 15 times more than actually more than that, probably 17 times more per year than he does. So I need more money than he does, right? So it's like, but that's the thing. I have that luxury of liking work. Like, I don't think I'll be 65 and not working. I'll be 65 and maybe doing things that are different, but I will still be working. I'll still be owning real estate. So, and by the way, my assumptions are that at 65, I stop working and just start pulling all my money off there. So I can bet you I can even get away with 0% returns.
Paul, I'm going to wheel you in here in your wheelchair and your oxygen tank, and I'll hook up the lights, and we'll still be going.
Get the Coke Zero.
Oh, great. Here's the deal. When I'm 65, I'm going to look like I'm 50. I'm going to walk around like I'm 50. My dad is 74 years old, and the guy plays golf 5-6 days a week, and he walks fast. He still works, all those things. Like, this is, guys, that's the way I feel about it. I expect to live to 100. Whether I do or not, it's a different story. But in my head, I just always assume I'm going to live to 100. So anyhow, I retired at 43. My daughter has more than me, but she likes working. That's great. By the way, that to me is a testament to a great child. Like, they have more, but they like working. If you want to work just to accumulate more, that's not, to me, not the right thing. Your child likes working. Good work. Be fine. Sorry. So investing with Adam K. So this is exactly it. I'm not 100% SCHD, but I buy it every single month, and I still like picking my individual stocks. Hey, Dalton, what do you think a good mix of ETFs and individual stocks for me would be. So talk ETFs. Let me pull this up. Hi, Highland Park. I missed you. So ETF versus individual stocks for me would be percentage.
A split between the two?
Yes.
If you're doing it based on just like you as an individual, your personal situation, you really, I mean, knowing you, I know how much you love individual stocks. So I would do like 10% individual stocks, 90% ETFs.
Oh, wow. Really?
Yeah.
Sam, what do you think?
How many individual stocks would you own out of that group?
I would assume 30 or 40.
I'd go up to like probably 30% individual.
Yeah, so I actually thought 20 to 30% myself.
If you told me you were only going to own 3 to 5 individual stocks and you were keep it heavily conconcentrated in micro, like only certain companies,
I'm a slut. I want a lot of different stocks.
Love owning good businesses.
I love owning good businesses. No, it's probably going to end up being somewhere in the middle here is what it's going to end up being. But the whole point is, guys, like, look at me. I have the stomach to own individual stocks. I literally have the stomach to own. It's been proven time and time again for the last 20 years that I have the stomach to buy individual stocks as they fall. PayPal going to 40 made me sleep like this at night. I did not worry about it at all. But even me, I'm going, yeah, but I don't need to do it. I can just buy ETFs and be great with it. But I still love buying it. But I'm buying individual stocks. I love doing it.
It goes right back to your point, though, when you just talked about that. It was a Conway's kid or B. Fine's kid who their daughter continues working not to accumulate because they enjoy it. Same thing with you with individual stocks. It's not because you just want to accumulate higher returns and build your net worth as high as you possibly can. You enjoy the process of picking individual stocks and owning them.
Absolutely enjoy it.
And
how do you reconcile that? How do you reconcile that as a business person where like your success in what you do as a career is defined by how much money you have?
That was a big thing though, Dalton. That's a great question because that was always a struggle for me saying, but I'm a business person. Having more means I did better. And now I've gotten way apart from that. I don't believe that anymore. To me, I'd rather have a smaller business that is run very, very well than a larger business that's run okay but makes more money. You know what I mean? Like, look at this channel. How many times I talk about this channel? We sit there and say, like, I'd rather have 500,000 dedicated subscribers who buy into everything than 5 million subscribers who are just like in and out subscribers. You know what I mean? One is 10 times bigger and a lot more vanity, ego driven, but I'd rather have the 500,000 people who go like, yeah, Paul, you're legit. This is great. Love talking about this. We're going to have a time. This is why I'm talking about this. We're going to have a time. I'm not going to say the number where we're going to stop allowing people to join our community. And we're going to say you can only join when people leave. So if any given day, 10 people leave, the next 10 people on the wait list will be offered a spot. They'll get 24 hours to respond. And then that's it. Because you know why? I want quality over quantity. Yep. Even if I could get 25,000 become 100,000, I don't care what it is. Whatever the number I pick is. If it's 10,000, 25,000, 100,000 people in the community, I'm going to stop it at some point and say, this is it. Because then I want the real people to stick around. That's the big give. I'd rather be the Ferrari than the GM or Ford. Right? I'd rather be the Highland Park.
Over
right?
Beechwood Mall.
What was that?
I said over Beechwood Mall.
And you know what's sad? Beechwood Mall 20 years ago was it.
Correct.
Even 15, 16 years ago, that was it. Yeah. But mall demographics are changing. That's just it. You have the mall's a different place now than it used to be. I'm 54, working less on purpose, rotating dividends and comfortable. That's great. Oh, good. So you're being smart about it. Easier for my wife to budget. Oh, you manage your kids' money, be fine. That's great. FISV is a 9 PE. Let's see what FISV is. Okay, what do they do?
I've heard it's actually pronounced Pfizer or something.
Leading provider of core processing and complements such as electronic funds transfer, payment processing, and loan processing. $30 billion market cap. So I assume they hold a lot of cash. Oh, wow. Look at our community members. This is a popular company with the community.
Yeah. Dalton, did you do an exclusive on this?
I believe he did.
Yes, I did. It was just requested a while back.
Okay.
Payment processors in general, whether the different subsector of the industry they're covering, I feel like in general have all taken a beating from where they were.
But this is not a bank, right?
No, it's not a bank.
It's purely payment processing.
But it's heavily between bank. It's like more of a bank system.
I was going to say, because look at this enterprise value versus market cap tells me they're holding a lot of cash here. Like not cash that's theirs, other people's cash.
Other people's deposits.
Yeah, deposits.
In accounts, likely.
Other people's cash. You mean deposits, Paul? Yes, deposits. Sorry about that.
Now, Dalton, when you did the exclusive, you read like the 10K, right? You were doing that, I think, at the time. So do you want to chime in on this with Paul and Sam?
Yeah.
Go ahead.
Yeah, I mean, I think that I think payment processing is kind of behind the. Sometimes you have flows of money and investor interest that is behind a stock and makes them, obviously appreciate, and people talk about them a lot. And that was payment processing in the heart of COVID. And I think that a lot of capital ran to the space. I think a lot of people got interested in being in that space. And what happens when too much capital rushes in is margins compress because things get more competitive. The industry, instead of being consolidated, branches off, and you get all these different players who are competing on price. And so I think anything payments processing related for me at this point, it's a hard, just where we're at in that overall capital cycle, it's hard for me to get super excited about anything like that.
All right, so here's what I'm going to say also. I mean, look at this impressive revenue growth, guys, over the last 10, 15 years, but it's really slowed down. Yep. It's really slowed down now. Is that because of all the competition out there? Is it going to be a rush to the bottom on pricing? They're buying back shares. Let me refresh this bad boy. There we go. They're buying back a lot of shares. A lot of shares.
And they were diluting, if you look back further.
Well, did they make an acquisition that made it go, or was it dilution?
I don't know how much money they.
No, I think it was. I think it was a couple acquisitions they probably used stock for. Doesn't mean it's right, because they were they're buying back here, and then two big jumps here, and then buying back. So I will say this: buying back shares at 9 times free cash flow. And by the way,
it should be productive as long as the business is stable.
And for the record, it's not 9 times free cash flow. It's 6.5, because their free cash flow is greater than their net income. I mean, this is interesting. My comment is, if this is a market company you feel confident looking into, I think you should. Because everything I read here goes, yeah, go ahead, Dalton.
Oh, sorry. I was going to give you another suggestion of a stock to look at when you're done.
Yeah, when I'm done. My thing is almost done here. I was just saying, like, they're buying back shares. I mean, our community members seem to like it. They're buying back shares. They're selling for a really low price of free cash flow. Returns on capital aren't great, but listen, look at these margins are getting better. 13.7, 14.3, 16.4, and this is over the last 10, 5, and 1 year.
Free cash flow margins have grown as well at a similar rate.
I assume so.
Margin.
Yeah.
They're up to like 21% free cash flow margin.
Yeah. By the way, Tim, should we add that here? I don't know. Either way, we can go to the stock analyzer tool and see where it stands. You're right, 19.5. All right, it's gotten better too. I mean, this is interesting. All right, Dalton, what's your company?
Take a look at WFG, West Fraser Timber.
Oh, here we go. Here we fucking go.
They've repurchased it.
Here's the funny part. Here's the great part.
They're basically net cash.
Here's the best part. It's a $5 billion market cap. And look at this basically this chart for today shows me it basically trades like 4 shares a day. So only Dalton, of all people, would find a company that was at $5 billion market cap and traded 4 shares per day. How do you find these things, Dalton?
An insatiable appetite for finding value. That's how I find them.
Insatiable. Okay. So he's saying it's trading at net cash. Dalton, that's not net cash. How? It's a $5 billion market cap with $6.5 billion in enterprise value.
They have 131 million in cash total.
Yeah. So how's that still net cash?
Essentially net cash. If you look at how much they actually operate, there's no solvency risk, and they were net cash for like 3 or 4 years.
Total current assets 1.4 billion. Of that 1.4 billion, 820 million was inventories. Their cash and cash equivalents are $359 million, and their debts are 1.77. They're not net cash. How are you saying they're net cash?
Said they were net cash for like 3 years. Now they have a little bit of debt on them.
That's a lot of debt.
But if you look at
Dalton, this is a lot of debt.
131 million bucks is a lot. It's
not 131 million dollars. Am I looking at the right company? Look at their long-term liabilities. It's showing 1.12.
Do you get that information though and is that in Canadian dollars?
Doesn't matter.
It should be in US dollars. It's on.
It doesn't matter.
I'm looking at their balance sheet right now. It's 131
Where?
million in interest-bearing cash.
So I'm up here at the top. Are you looking at their actual balance sheet from their statements?
Yeah.
Well, then it might be a data provider problem. Let's look it up. What's the name of this company? West Timber.
West
Fraser Timber.
FASER.
Oh yeah, you're right. Thank you. Hey,
Yeah,
Paul,
that's a good point.
Do you understand your software? Dalton, Dalton tells me that NVIDIA actually is net cash. All right, let's go sort by 10K. Where the heck is it? This changed. Oh yeah, they're idiots. Where do I get the 10K?
They're 40.
Oh no, they're not a 10K. What's their thing called?
40F.
There it is. 40F. That's not it. Yeah, light reading before bedtime. Is that an update of the 40F? Somebody help me out here. Dalton, share your screen. Do they not report as much on these? Because I'm not seeing any financials.
There's your financial statement.
Yeah, it's audit
That's called a
fees.
detailed financial statement. 3 lines.
Dalton, can you share your screen?
Yep. Pulling it up now.
All right. Oh, I can't see that. Just scroll down. All right, current assets. Okay, scroll down. So long-term, I got to get rid of this here, right here. Okay.
Long-term debt, 300 million.
What the F? Why am I seeing long-term liabilities, 1.12? Oh, you're saying the non-current portion of
Long-term debt is 324 million.
Why do I show way more than that here? I'm wondering if it's adding if the data feed. Okay.
Well, I guess more than the balance sheet. It's just they're an industry leader and basically what is a duopoly between them and Louisiana Pacific.
What are their current liabilities on there?
Current liabilities on here?
Yeah.
Is let's see here.
I used to own Louisiana Pacific a few
It's
years
like
back.
Did you?
It was a Berkshire stock, actually. One of Ted or Todd.
It's around like 610 million.
Yeah, I'm seeing 650. So that's why I'm wondering why the long-term liabilities are so different. But even then, it's not net cash because the cash on hand they have is still doesn't even their cash and cash equivalents don't even cover their current liabilities. With that said, they have a lot of inventory. Their inventory is 828 million of their 1.4 billion in current assets.
Last time I really digged in their balance sheet, they had 650 million of cash. So they've used some cash, they've added a little bit of debt. But
yeah, if you look,
what I mean is,
right here, look at that. That's insane.
And if you go down to 2024 debt, it's only like $16 million.
So that's a good question then, Dalton. So that's what Sam just said on this one. My question is, why is the cash? I mean, look at this. They had 1.4. By the way,
they had 1.6 billion in 2021.
Yeah, they had 1.4 billion in 2023 in terms of cash and cash equivalents. Or is that total the same thing? That includes that, right? I don't know why they depleted cash so much. What have they done with the money?
A lot of it was during COVID. They over leveraged when prices hit like 1,400 per board
Did
foot.
they?
And then they have to, now that there's a lot of capital expenditure with their assets too. You got to reinvest in those assets and turn the sawmills around and stuff too. So costs are high because the price of lumber is shit. But
by the way,
they actually still generate free cash flow.
This is why I love Dalton. If you showed me a balance sheet and said this is a Dalton company, this screams Dalton company. Free cash flow up, down, negative, really up, really up, down, even. This is such a Dalton company.
That's why it could be interesting.
Well, that's exactly it.
Because look in 2021, you produced 120% of the current market cap.
Dalton, can I ask you a question?
Yeah.
What did you think? Did you think I was going to look at this and go, yeah, I get this?
Honestly, it's kind of fun sometimes. You know, they say that dogs chasing mailmen they don't really know what they want. They just want to get the mailman and then they don't know what to do with it.
Who's the mailman here? You or me?
You're the mailman.
I know.
I'm the dog.
I'm kidding.
I like to just throw things out and see what happens.
By the way, I don't say this as like, I want people watching this to realize like Dalton thinks different in a good way. Like I get consistent. Like to me, I'm just like, when I can rely on it, I will pay a premium for that. That's why Dalton does better than I do in investing. Like, you know, Dalton, how many stocks did you buy from me individually?
There are 9 total now.
And 3 have already doubled. And it's only been like a year. And it would take forever for me. I have 28 companies. I think only 2 have doubled, like of mine in a year. And so it's like, that's what I mean. Like, this is where, if you want to get into the nitty gritty details of how to look at a company, Sam and Dalton, your guys. I by the way, I'm sure, I think Sam's more on my side of like the whole larger cap and looking at mispricing. Dalton wants to find the, $50 million company that is selling for his idea of what net cash is versus,
I have a really interesting
reality.
idea on a Norwegian shoe aglet producer.
Please tell me you're joking.
No, I'm kidding.
Okay. I thought he was serious.
I did too. For a second, I was like, oh my God, he did. And it was funny because, hey, Dalton, who was it your idea about the Mexican? No, I brought up the Mexican airport company to you, didn't I?
The airport
brought that up, yep.
Yeah.
We've had a ton of discussion in the community about those recently.
Really? Grupo Americano or whatever it's called.
OMAB, ASR, and PAC are the 3.
PAC is the one I own.
Okay.
I shouldn't have said that.
They're all above $2 billion market.
Is it over $2 billion?
Yes, they're all.
All right, I did say that, but don't buy it because I have it or anybody else on the internet has it because we're here to teach a process. But the point is, when I want somebody to go get the nitty gritty details, that's why I got Dalton, because he's willing to sit there and look at these companies because we tease him in the group chat. We have this group chat going and Dalton takes it with great enthusiasm. And we're like, oh boy, here's another commodity business. And then there's Dalton going through. So anyways, Dalton, talk about this company because I have no idea what's going on here.
Dalton's teeth.
What was that?
That was so good.
The F. Dalton's wisdom teeth.
Yeah, that's right.
And the joke convincing Dalton that oil was tanking 40%.
Oh my God, that was the best.
That was so bad.
Tim totally. What'd you say, Tim, in the chat? What was the exact same thing you said?
I think it was why is oil down 40% right now or something like that?
Dalton started coming up with real reasons it might be happening.
He was so
I was
pumped.
I was maybe 25 minutes removed from waking up from anesthetic when I saw that text.
God, that's great.
Anyway, it's a super cheap business on an absolute basis. The price of lumber, there's reasons to believe that supply and demand are going to work back in favor of the producers. The asset base they own is really high quality. They do a lot in oriented strand board, which is supply constrained, hard to get your hands on. They have a premium pricing with that. Good management team. They buy back stock. They pay out cash, and they trade for a third of their asset value. So
we have one community member who's rated this company. Dalton, was this you?
Pretty sure it was me.
Yeah.
All right. I have a question for Dalton. Can Dalton hear me? So Dalton, speaking between LPX and this company, what would you say gives this preference in your mind if you're looking at them from a
valuation? Valuation. Okay. Louisiana
Makes sense.
Pacific is more U.S. focused, and they get a lot of the investor interest because they're U.S. based and they're the only oriented strand board producer. Canada is kind of behind the 8 ball. Valuations are a little cheaper, so that would be why.
Okay. I have another question from the community now for you.
Let's hear it.
So Paul, this is coming from Ethan. He's a great community member, talks all the time. Paul, how much do you pay attention to sentiment? Anything have you learned anything about when to take a position other than price versus value? Is there anything else you consider?
I feel like that gets me too emotional, and so therefore I avoid it. With that said, I've thought about looking at trading and momentum and technicals about this. I know Burry does it, and I've always been interested in that. But apart from that, since I don't have that knowledge yet, I don't do it anymore.
It also is something that if you don't end up enjoying that, you don't need to push to get that extra return by timing your position in Alibaba perfectly over the course of 3 years. Like if you end up owning at a low cost basis, you're going to do well.
I just accept the fact that I'm paying a cheaper price as time goes on. If it goes lower, I mean, I buy that whole mantra. Guys, when I say these things to you, I say the things to you that worked for me. Guys, you're not going to get the bottom, so you just have to buy stock assuming it's going to go lower. So every time I buy a stock, I just assume it's going lower. In fact, a lot of times when I buy a stock, I'll sell a put at a lower price. Just because I go, it's probably going to go lower. Only one time ever have I bought a stock and it never went below that price ever again. That was Southwest Airlines. I happened to buy it literally at 25 on the nose in 2020. I don't think it went below that. Did it go below that recently? I don't know if it did. Well, I know it's up now, but I'm saying it got into the 20s at one point. 10-year. Oh, no, it hit. It did hit there. It did go below that. So even then, I didn't do it. So I've never bought a stock and not end up lower at some point.
It's just a reality.
That's just the way it is. 38 what? Your teams are amazing? What do you mean my teams?
I'm assuming that means me and Dalton.
Oh, I'm 44. I am 44 years old. I'll be 45 on July 5th. Please send money to my Venmo.
Hey, I have an actual business for you to look at now, Paul.
Oh, jeez.
So you admit now that you were totally trolling me by asking, okay, what's the actual business?
I had to a little bit. All right, this one is, the ticker is AESI.
Nope, this is another.
I'm not looking.
They don't do what they think you think they do.
Number one, it's sub $2 billion market cap.
It's sub $2 billion. So
is it?
Yes. So
that was not Paul. That was actually a business that I thought you as an individual, like, you would like the niche they're in. They sell sand.
This company before.
Have you?
Yeah.
And
they sell prop sand, the fracking industry in Texas.
All right. Well, I'll take a look at it sometime with you and I. We have a call tomorrow anyway. Tomorrow, Dalton, Sam and I are meeting to talk about Kohl's. Should we do a live stream on that one?
Let's see what comes out of.
Kohl's not under $2 billion.
It definitely is.
Oh, that's right. We did that. Forget that. You can't have a live stream. That's right. We had to take it out of a.
That company actually doesn't exist.
Well, we can sit there.
Yeah, I know. We can talk about it. We just can't
analyze it and do all that stuff. Does what's his name? Fudge. Yeah, Arlen. Do you know AESI? Does he know that company? Why was I going?
He probably does. Dalton, didn't you do an exclusive at some point?
So.
When it was over $2 billion?
Dalton gets to do, so guys, a benefit to the community is you get to request stocks and Dalton will do exclusive content on them. So some of these stocks, I shouldn't say all of these stocks, but like Pfizer, if someone had requested it, Dalton did an exclusive on it. He may do it on a lumber company or any kind of company that you may not see Paul analyze on the main channel, but Dalton will do those exclusives. And then twice a month, Sam is leading live streams and doing stock analyzer with a bunch of different stocks. Like, how many stocks do you guys usually analyze on those live streams?
Anywhere from 10 to 15.
Do you really?
Oh, yeah.
Wow.
And
I usually try to prep
they all chime in, right, Sam?
Oh,
like,
yeah. I
usually
like
this assumption here.
Yeah, that's the big thing is, like, my first question when someone brings a company to analyze is, you need to tell me about it. Like, tell me why you're interested, maybe what assumptions you're putting in stock analyzer, why you like the company. Because, like, it's easy for everybody to just drop a bunch of tickers in, but when you come with your actual thoughts, that really gets me engaged on.
So when they're just coming with ticker symbols, I just feel like they're just saying, hey, analyze this for me.
I want to see what you think.
Yeah, as opposed to like, no, tell us your thesis.
Which is what actually happens in the community, right? In the actual community when we chat, it's not, Sam, send me your stock analyzer so I know whether or not to buy. It's, hey, Sam, here's my stock analyzer. Here's why I like this business. Here's their competitive positioning. And I come back and I say, either I agree, I disagree, I agree with this part, I don't with this part. And that's where the difference of opinion creates great dialogue.
And you have to remember, we're on YouTube. That doesn't mean that we're any smarter than anybody else. We do think our process is pretty good, as is evidenced by Monish Pabrai agreeing to interview with us when he said, I watched your videos and you're the real deal. And then he said,
doing God's work.
I'm doing God's work. And that's a guy who's friends with Charlie Munger and Warren Buffett. So I do think our process is solid. But at the end of the day, guys, we're going to disagree on a lot of things. The other day, one of the best investors I think I know, Gary, he disagrees with me completely on Adobe. But guess who agrees with me on Adobe? Michael Burry. You know what I mean? It's just like the great thing about value investing is we all think similar ways, but we approach the things that we understand the way we understand it.
There are also, this is another really interesting point. There are so many times where these super investors who do actually run concentrated portfolios don't buy things, but they may actually agree with you. So there's videos of Monish Pabrai and Seth Klarman saying that Meta, even sub like $200 a share, they're like, it's an easy double over the next 3 to 5 years.
So why didn't they buy it?
I don't know. That's my question. That's where I think maybe they're overcomplicating. Like, oh, I'm not investing in a massive large cap company. I'm looking for value elsewhere or something. But like, there's literally videos I could pull up right now of Pabrai saying like, I genuinely believe sub $200 a share Meta's a double in 3 to 5 years.
So let me pull up Charlie. We're going to have to head out here right now. There's a great account called Charlie Munger Quotes. And here's a quote today that I saw. Don't overlook the obvious by drowning in the minutia. I just think that's such a great quote because it's easy in investing to overcomplicate things and worry about small things versus understanding the big picture. This is what I talk about when I say all the noise out there. Like, I remember years and years ago, I liked Oracle, and it was like at $7 a share. We're talking about like 2001 or 2. And I sold it because my friend of mine's dad said, I looked at Oracle, I don't like their sales process. And I thought, oh my God, he looked that far into it. He must understand it. No, it was just bullshit. And they might have had a bad sales process, but they fixed it. And I was looking, but back then I believed that every small detail, guys, I have several companies. Not one single company runs perfectly. There's always, you could make the argument that everything money is going to zero. It's not going to go to zero, but somebody could come in here and say, well, I just think that YouTube is not, remember when they said YouTube was going away because TikTok was going to, do you remember that? TikTok was going to replace YouTube.
And Instagram and WhatsApp.
Everything.
And it got bigger. And a lot of people thought that Google would be replaced already by like ChatGPT.
Correct.
And now the narrative is we see that Google searches are still up year over year.
And Google's stock price is more than doubled over the course of a year from where it was.
More than double.
AI would replace Google and it was becoming obsolete. Google will be the winner in AI in less than 12 months.
But that's where the mispricing happened with Google because one, the lawsuit, people let the fear really push them. But then secondly, they thought Google's really going to get hit by AI and
it doesn't mean that stories aren't going to end up being true. But two things. Are the stories the be-all, end-all that end the company? Or two, will it have the dramatic effect? And I don't mean that just on the downside, the upside too. It doesn't mean that just because the story is good, it's going to be as good as people think. So guys, I have to go. I have a meeting in 27 minutes with my high school where they're trying to mask it as a survey of me, but really what they're going to ask me for is a lot of money.
Nice. I might have gone.
Money grab.
So, yeah. Sam went to the high school. We were on a live stream once, and Sam said he had said it to me before, but he went to my high school. And so I said, let's get lunch. And now Sam, works here on the channel. But anyways, I appreciate everything.
I think we'll stay on for a few minutes and
great.
let Sam
stay
and
on.
Dalton talk. And
I'm good until.
All right. Sounds good. Thanks, guys.
So, Sam, do you want to talk about the foundations class coming up?
I will talk about the foundations class. Do we need to wait for Paul to walk out?
Paul can go walk behind you.
Oh, okay.
And yeah.
Make sure you pop it and wave or something like that. Okay, guys. So coming up, March 18th. So we're 6 days away. Will be the foundations class. I think this is one of the greatest values in everything money. I love telling people about this class because it's 8 hours plus of time discussing with Paul and Dalton, learning directly from us how to actually apply value investing, how to use all of the tools that we offer on the Everything Money software, how to actually design your own portfolio, position sizing, how you plan for retirement, the stock analyzer, the 8 pillars, all of the key metrics. You learn directly from them. We limit the size of the class so that Paul and Dalton and myself can actually get to know you guys, that you'll learn directly from us on Zoom, face-to-face. If we're going through the middle of something, and Paul's talking about the cash flow statement, free cash flow versus cash flow from operations, and you have a question, you just put your hand up and you stop him and you say, hey, Paul, could you just re-explain that right there? And he's happy to. So the whole class, you're going to get 8 total classes. It's $497, comes with 3 months of the software, which if you pay monthly is an additional $150 off of that price that's included. So if you're interested and you need to know more, I'm happy to talk with you. Schedule a 15-minute call with me. We can figure out if it's right for you, right for your goals right now. If you're interested, spots really are filling up genuinely. It's an incredible value. Just go sign up now. We'll have a link in the description.
Yep. I'm going to drop that link now. Dalton, you teach half the sessions in that class. Do you want to talk through the benefits of the last class? I know Arlen, who's in the chat, was in that class as well, but you want to chat through that real quick?
Yeah. I think the value, at least of the last class that we ran, was Paul mentioned that finance is, or personal finance is more personal than finance. We actually got to know the individuals in the class, and so you can watch a YouTube video, you can do research on a stock, you can do all these different things, but at the end of the day, you don't know necessarily for your individual circumstances if it's right for you or not. And so when you come to these classes and you get to know Paul and I and Sam, and we get to talk to you over the course of many, many weeks, we're able to not just help you and guide you and give you perspective on how we look at situations, but you're actually able to tailor the teachings from the class to you specifically. And more important than what works for you, what we found is a lot of people examine what doesn't work for them, which is just as important as what part of the process is going to be beneficial for you. Is, hey, what can I avoid? What can I avoid totally? And so it was a great class last time. I really enjoy it. I enjoy talking with you guys. I enjoy giving you a look into my mind and my investment process. I'm not on the screen quite as much as everybody else, and so I really like the long form, one-on-one, get into your brain, get into mine, and share ideas about investing and finance. And it was a lot of fun last time. I'm looking forward to it again. So,
yeah. And one of the awesome things is you get 3 months of the software included in that. And so there's going to be you're going to be going through all the courses. Can you show them, Sam, the courses where they were? Because somebody was asking, like, where can they find, like, there's the courses, but where Dalton stocks are, stock analysis as well.
Yeah, absolutely. I'll actually give like a quick rundown of some of the things that are like the top questions people ask me.
Yeah, let's do it.
I've spoken with, in the last 6 months, probably like 500 people at least. I talk with people 10, 15 times a week. So we have courses recorded. One of our big things with Everything Money, right, is we just don't want to be some paid subscription. Like, we don't want to be some paid software subscription where you join and you have to figure everything out, right? We want you to be a member, part of our community, and actually be able to take you from step A all the way to actually understanding value investing, applying it, and talking with myself, with Dalton, with all of our other community members about the ideas you're potentially finding. So number one, we have 15 different training videos set up. You can see them on screen right now. And then on top of these, you're going to understand a ton of different things. Now, obviously, the value of the foundations class is you actually get to discuss with Paul and Dalton, right? You actually get to chat with me. You get to learn and stop and ask questions about this stuff. But we have videos recorded to help you when you first join. So a lot of the people I've actually recently talked with who are doing the foundations class, they're watching these videos to get the understanding, right? So they come with a low level of education on how to actually start to practice things. And then Paul and Dalton can kind of fine tune their detailed pieces of it. And then, in addition, right here, and you're going to see the power of how much actual data you have on different companies that people have requested. These are the videos that Dalton has done. So you can see right here, I'm going to scroll a little bit. There are just a ton of companies. So that was all just in the past month.
We're dropping 3 today too, after the live stream.
And we're dropping 3 new ones. So if you're in the community, go check those out and watch what Dalton has to say. But guys, the other nice thing is, yes, the price changes on these companies, right? So if I go way back to Westlake 7 months ago, the price may be different. Fascinating company, by the way. Dalton did a great coverage of it, but the price may be different, but the actual fundamentals, what Dalton shows you in the different balance sheets, the cash flow statement, the income statement, what he shows you on the 8 pillars and stock analyzer, that information still applies today. Maybe it's differed slightly, but the true value of businesses doesn't shift dramatically over a 3 to 6 month period, right? So that's incredibly valuable stuff. Also, depending on what tier of the software you're on, we also have options courses. We have trading courses from Mo. If you're on our Oracles of EM tier, you also get live trading sessions with Mo and Bailey and that team, which are really great. I've
4 times a week, by the way, now.
4 times per week, guys. So 4 times per week. You don't get much better value than that. And then the other thing I'll show you is one last thing, community live streams. So people love this because that's where you actually get to come talk and interact, and people will talk back and forth with each other in the chat. They'll talk with me about the companies that they're looking at. We cover 10 to 12 companies at least in each of these videos. Dalton's been on a live stream with me. Dalton actually joined the last one and dropped in some great suggestions that people loved on the last live stream. But you can see how many of these we do every 2 weeks consistently. And for people who can't make it, the beautiful part is it's recorded. So what I do is I tag everybody. I say, hey guys, if you can't make it and it's before the live stream, give me your suggestions now. I'll cover it and I'll go do some research ahead of time. And that being said, after the fact, I tell you, come tag me in the community if you have a question about why I made a certain assumption. So, that's the big piece of it, right? It's more than just the software. The stock analyzer, the 8 pillars, the key metrics, the options chain, all of this is best in class. But the actual interaction you get with us and with the other community members is what really truly makes it more than
and
just
that's
software.
just it, Sam. And Dalton can attest to this, is like there's just so much AI out there. There was just so much things like Discord where just people were just like chatting back and forth. And we wanted to add those human interactions. And so that's why like Trading Community is getting together live 4 times a week. That's why you're leading live streams all the time. And then, I mean, essentially, if you join the community, you can essentially have, or you're a part of the community and you didn't know this, you essentially can get your portfolio reviewed over the course of a year with having Dalton, analyze stocks that you're either interested in, which is confirmation bias, or a stock that you own and you might want to know, like, what's the future growth of this potential, this company I own, and Dalton's able to look at that.
We also have the blog feature too. Now.
Yeah, blogs coming out. We were talking about Monish Pabrai. I have an interesting one coming on Monish Pabrai on next Monday. Not to spoil anything, but it'll be a good blog on a recent acquisition he made in his ETF.
Very cool.
But yeah, guys, the blogs are another really cool feature, right? Like we're just trying to bring so many different forms of actual interaction, right? You can use AI to try to generate some kind of discounted cash flow model. Now, number one, AI still hallucinates, so make sure you double check your numbers and triple check them.
It does, yeah.
But you cannot replicate what you get with this entire community, with all the interaction, with the live streams, the exclusive content, and then not to mention the tools are best in class.
Absolutely. And Adriana, I think this would be a good one, actually. Melly.
Absolutely.
I think for you and Dalton to look at Melly, I think it would be awesome.
Absolutely. It's a fascinating company.
Bandit, could I ask what time days the foundation course live streams will be? Okay, it depends on the day. So it'll be 8 sessions, 4 with Paul, 4 with Dalton. And so what we do is, Paul comes and teaches, and then usually the follow-up session, and this is like what we're doing, the model we're doing with our options class that's going on right now, by the way, is like Paul will teach, and then the next session, Dalton is helping you get clarity, answer your questions, and implement, period, and implement. So that's what we do. But like you get to and the way those classes are structured, I'm going to get to how the days and times in a second. The way it's structured is like you just unmute, ask Paul a question, unmute, ask Dalton a question. It's just back and forth. It's really more of like a mastermind in a sense, over like feeling like you're in a class environment. But anyways, Paul does those Wednesdays at 10:45 and for his sessions, and then Dalton's are Mondays at 2 p.m.
Eastern time. Yeah. One big thing I'll say about the foundations course as well, not to just, keep hitting on the same topic, but I recently graduated from college, right? And I took a valuation course. I took basic finance courses. I was a finance and management major. It was over the course of 8 weeks. It was 2 classes a week, but, not that much different time-wise. But because of how expensive college credits are, that one class is $3,500 to $4,000 worth. And I'm learning from a lifetime professor. In this, you're learning from Paul and Dalton, who've actually practiced value investing and done incredibly well directly. And you can stop and ask them questions anytime. And you're also not going to be one of 250 students in a lecture hall. It's going to be a smaller group, and you're going to actually get to know each other and actually learn. But let's get into Melee. Let's talk about this one, because this is a really interesting one. I've talked with this a lot. I've talked about this a lot with people in the community. I know people who are really interested because it brings a different exposure outside the U.S. There's a lot of talk about, whether or not U.S. markets are inflated, what's happening in the U.S. So this brings more of that Latin America, South America exposure. It's a fascinating business model. Before we get to that, you can see on the all-time chart here, dating back to like 2007, 2008, this company is up about 5,700%. That being said, they've done no stock splits, right? So this is a company that doesn't get the type of trading volume it would if they did a 10-for-1 stock split. That being said, they're interesting because they are considered the Amazon of Latin America, right? But there's a lot more to it than that, right? They have a financing arm, banking arm, payments processing arm. And that's one thing I'll note when I tell you guys about free cash flow margins, because this is a big point I've emphasized to our community members on why you have to go do more research than just the broad numbers and understand why there's differences. But if we pull up the 8 pillars, we take a look at that and the key metrics. They haven't bought back shares. That being said, I like to see this, and I don't necessarily think Dalton would disagree, because for a long time, not only have they not traded extremely cheap, they have a strong reinvestment engine. This company has hit 30% plus growth every single quarter since they IPO'd. This most recent quarter growth actually accelerated, and it was more like, I think they hit 45% year over year growth. So they just continue to dominate. Other companies are having a ton of trouble taking market share. And a couple other big things, they have a really clean balance sheet, significant growth in cash flow, revenue, and income. Right here, strong ROIC, their ROE as well, 33.4%. And if you look, it's actually trading pretty reasonably based on 5-year free cash flow right now. But like I said, you need to actually consider what goes into that number, because Dalton and Paul and I have talked a lot about like understanding banking, right? Because the companies operate differently, right? Like debt is part of the operation that then generates the profit. So free cash flow can be heavily skewed by that and look far higher than it actually is. Sometimes it just doesn't apply at all. That being said, if you look right here, we can see the 52-week high, which was in July, 2,600, 52-week low, 1,630. We're close to that right now. I think we saw a little bit of a pullback today so far. Yeah, so we're right back. We're, $18 off of the 52-week low. So if we check out analysts, I mean, guys, this is insane. Now, what they do have, and this is where it gets interesting, they do have revenue growth tapering off significantly. Now, when I was looking at this company with somebody in the community, they showed that analysts had done this multiple times throughout its history. And so far, it's not been accurate, right? So like they're growing, they just grew like 45% year over year, and they're coming off of 30% plus for, whatever, like 17 plus years. They're saying that's going to taper off. The question for me then becomes, I'm big on the whole heads I win, tails I don't lose much. The question becomes, if the growth does taper off significantly, can I still pay a price today where I do well long term? And then you still have that upside if they do better than that. But you can also see EPS growth expected to massively outpace revenue growth. That's going to be their margins likely improving, which I'll talk a little bit more. So we look at Stock Analyzer, and this is what I'm talking about, right? I mean, look at that right there. That's just incredible growth. Now, what I'd tell you is, first, I'm going to change the years of assumption to 7 years. I'm going to look a little lower. I don't want to predict too much about an emerging market. I don't want to get too aggressive, assuming they're going to grow at super high rates for 10 years. But what I want to talk about is margins, right? Because you can see a significant, like a massive difference right here. If you look based on free cash flow margins, we're trading at 9 times free cash flow versus if you look at profit, you're at a 40 PE, which would be a PEG of 1. That's a feature that could potentially be coming to the software soon.
It is. Yeah,
Sweet.
I think probably within the next week or so.
Yeah, so it's heavily in demand. We'll talk more about it. We'll do more videos. We'll release some stuff on how to use it properly, but that's a metric that's been in demand by community members and new potential members for a while. But what you need to remember here is that banking impacts the free cash flow. So what I would actually tell you is the true margin of the company based on the research I've done is higher than the profit margin, but significantly lower than the free cash flow margin. So based on what I've done, and this is not, you've seen this kind of with Amazon, right? As they've started to mature, their margins have improved significantly. Based on what I've done, the real margins are probably somewhere around 11 or 12% right now. And looking out into the future, I think they have the potential to get to 13 to 15% margins long term. I don't know if that actually will happen, but that is one reason why you saw that EPS growth heavily outpacing revenue growth. So when I come in here and make assumptions, I'm going to go based on that. You may have a different opinion. You guys can feel free to drop those type of opinions in there. Let's see right here. So I'm going to start by tapering off. I want to go with a wide range here because this is such a high growing business. But I'm going to go on the low end for 7 years at 14%. Now I know that's really aggressive, but like I said, this company has never posted sub 30% revenue growth year over year. So that could still be a conservative assumption. Obviously, if I were making real assumptions, I'd be building in a margin of safety too, to make sure I'm buying at a price that even if it ends up lower than that, I'd still do well. But let's go with 14. Man, it's tough. This is what's tough when you have a business that's scaled and grown this quickly. But let's go 14, 20, and 24. I know that doesn't line up perfectly, but it's tough for me to predict out that this company will grow 30% for the next 7 years. That being said, I'm not saying it can't happen. There's a probability weighted average you probably need to figure out of what may actually happen in the future. Margins, I'm going to go with 9, 12, and 15%. And I'm going to keep that consistent for free cash flow and profit. Like I said, I've done some additional research. You need to go do the same to actually confirm that. If you end up disagreeing with me, tag me in the community. Let's talk it out. P in price free cash flow, right? This is a high growing business, strong ROIC, very little debt. They have a high quality balance sheet. Management's done a good job of, not paying out dividends. They've been reinvesting back in the business, not buying back fairly valued or potentially expensive shares. We like to see that stuff. I'm going to go with, now it is also not a U.S. company though. And in general, U.S. companies typically trade at a premium to the rest of the world. So I'm going to go with 19, 22, and 25 times earnings. That's basically a PEG of 1 looking out into the future. But we're gonna roll with it. We're gonna see how this comes out here. Let's go 9% return across the board, at least to start. And we click analyze. And guys, this is, again, we're not talking about this free cash flow margin that's this high. We're talking about the actual discounted version to what I think real margins look like. It's getting really attractive, right? I mean, you're looking at a 20% return in the middle, 31% on the high for 7 years. And then on the lowest end, you're looking at 7%. If you told me that this was the future that was actually going to turn out to happen, I think that, any 3 of these were going to be the future that turned out to happen over the next 7 years. I think that this would be considered a heads I win, tails I don't lose much, right? Like if Melee doesn't do as well as I expect and I end up capturing 7 to 8% returns over 7 years owning a high quality business, I would not consider that an unsuccessful investment based on my process, right? Because there will be other investments like Paul always talks about. If you own 15, 20, 30 businesses, there will be others that look similar to this that play out more on the high or middle range, and there will be some that turn out in the low. And overall, you're going to do very well over long periods of time. Let's see. Anything else we want to cover?
I was just letting folks know that we're going to do Adobe and Alta earnings when Paul gets back.
Daniel, thank you. I appreciate it. Personally, myself, my girlfriend, we believe I'm a stud, but some people have disagreed with me.
And Justin does too.
Thank you, Justin. Yes. Tim, you don't agree? Come on. All right, what else do we have, guys?
No, I was just looking at the comments to see if there was anything else. I don't think so. I had asked if there was any other stocks people were interested in.
I saw someone request ServiceNow earlier. That's coming out in a video soon on the main channel.
It is. Yeah.
So
Monday.
I don't know if we want to not talk about
that. Monday we'll do ServiceNow.
Perfect.
So really good analysis there. That's a short spoiler for you guys.
Yep. Yeah, that'll be a good video.
Yeah.
That's a really good group of companies.
I think that's it. Do you guys have any last questions for Sam before we sign off?
Yeah, guys, anything. Happy to answer. If you guys have anything, drop questions in there. Dalton, you have anything else to say? Dalton had to go. All right. What are we looking at here? Actually, HPQ, let's check it out because HPQ fell a lot. I'll just do a quick analysis. I don't know what time it is. Okay, yeah. Yeah, let's cover quick analysis on HPQ. It's crazy. HPQ is at $18. And PayPal just hired HPQ CEO, and they were kind of talking about the success that he's had during the duration of his time as CEO. The stock is down. Now, what I will say is he did split off HPQ and HPE, so HP Enterprise. Overall, including the split off and everything, the performance of the stock, if you would have looked back, has actually been successful. So you had to go do a little digging because a lot of people I know looked at it and they were like, successful. The stock is down 40% since he took over. But there's more to it than that. Also, you can't judge based on short-term price movements, right, guys? This is all we talk about all the time. Paul's been preaching this for, 7 years plus on the channel. You can't just look at stock price. And that's why when Paul and I talked about PayPal and the compensation structure, it's better that the CEO be compensated based on how the stock performs than have no ties to the performance of the business at all. But it would be best if the performance of the revenue, the cash flow, the profit that are produced are what the actual compensation is tied to, right? But anyways, HPQ. So here's the story. And this is why I love the 8 pillars, right? Saves you a lot of time in giving you the current story of the business. So what does this tell me about HPQ? Very simple. Declining business, pretty fair, solid fundamentals, right? Manageable level of debt. They've bought back a ton of shares. They're trading at low multiples, which typically happens for declining businesses. And the ROIC is high. Why is the ROIC high? Because they've drastically reduced the float, right? If you talk about the formula behind ROIC, part of that is the total equity outstanding. If you significantly reduce the equity outstanding and you decrease the denominator, well, the overall number is going to be higher, even if the numerator is not higher. But anyways, if we look at the 52-week high and low, we can see right here, it was up to $30 a share. And that was not that long ago. That was only, 5.5, 6 months ago, that it was $30 a share. We've fallen significantly since then, 30, 40%. Let's talk about analyst estimates. I don't expect to see a lot of great stuff. There you go, right? Now, here's what I'll say, though. If this company is trading, and goes back to like a British American Tobacco, Paul and I've talked about quite a bit. If this company ends up at, let's say, 4 to 5 times free cash flow, and that free cash flow grows 1% a year, well, just do the simple math. If you owned the entire business, right? 5 times free cash flow is a 20% free cash flow yield. If you bought something with an earnings yield of 20% and it grew 1% a year and it did not decline and you own the real business, what type of return would you expect to make? I'd argue you're probably going to make something close to 20%. So that's what you have to figure out, right? Now, the story becomes different if this company is going to start declining significantly, but analysts don't expect that to happen. Analysts swing a lot though, right? Like they're not always accurate. You can't just go based on analyst estimates. You have to go do on your own research. But if we come in here, let's talk about Stock Analyzer. Let's look out 10 years. I'm going to go with -2, 0, and 2% a year. Margins. I'm going to keep this pretty consistent. I'm going to go with 4, 5, 6%. I could argue that you could go higher on the idea that if they're going to be a declining business, they shouldn't be overspending on marketing or R&D or anything like that. And overall, they should be able to improve their margins, especially if they cut headcount significantly. Something I've also seen people talking about with PayPal. That was a fascinating story because was it Block that came out? Was it Peter Thiel and Block who came out and just drastically wiped out most of the headcount?
Jack Dorsey. Yeah.
Jack Dorsey
just like, yeah, we're done.
Yeah. So he just drastically reduced the headcount. What's interesting on PayPal is that he reduced headcount from like 11 or 12,000 people down to like 6 or 7,000 people, which is a huge layoff. They're a similar sized company in scale to PayPal, and PayPal has like 24,000 employees. And you saw Block stock jump significantly, like 25, 30% overnight when he made that announcement. If PayPal really did come out and start decreasing headcount, say we have efficiencies and we don't need to be overspending, that would be another major catalyst on top of acquisition news that could send it flying. That's no reason to go buy, but that is something to potentially model into potential scenarios, is what would margins look like if they cut the amount of employees by certain percentages.
So it's funny, we were talking about this kind of thing in our options class because Paul was talking about it with his strategy and why he does options the way he does and chooses the deltas he chooses.
Yep.
And how he does these covered calls with these stocks he owns, because he doesn't want to lose the shares of Southwest or
you want
PayPal
to generate the income, but
or something. He doesn't want to lose them on that big jump.
Correct.
Because
the
of
one-time things,
because of the one-time events and things like that. So anyways, those are the kind of cool nuances that you get to do with Paul.
Yeah, those are things
now,
you
even though we
learn.
won't be doing that options like in the foundations class, there's many other things. You get many nuances of Paul and Dalton in those classes. So anyways, they're really, really valuable to be able to have that. And so, yeah, I don't know, but we'll see what happens with PayPal. That's a great point that you have.
Another thing to remember, if you're thinking about doing the foundations class, the beauty of having Paul and Dalton teach, Paul talked about it the other day, Dalton significantly generated higher returns, right? Because he has this kind of niche style of investing where he's looking at these smaller cap commodities businesses. He brings those to the community, right? He brings a lot of those ideas that are over $2 billion market cap, and we actually discuss them in the community. So Paul said, he thinks I lean more towards his style of investing, more high quality, larger businesses. That's true.
I think you're moderate. Yeah, I think you're moderate. Like I'm
moderate.
Them.
So I kind of like when I'm talking about my own personal portfolio, like I kind of divide it up into different areas, right? So like I have my standard, I have like, I'm looking for the highest quality businesses in the world at a certain percentage return. And then I have a portfolio that's just commodities businesses, which, a lot of those ideas come from Dalton and I texting or talking in the community. Like,
absolutely. And I know there was one that like, maybe he'll do an exclusive on soon that we were waiting to get above a 2 billion market cap. Yeah. That thing's been, was it up 20% the other day?
Yeah.
Maybe it was yesterday, like 22%. I was like, what the heck?
Yeah. But there's a lot of great ideas. One of the ones that because this was newer to me, right, guys? And I actually learned from Dalton. And a lot of these companies, these commodities businesses make a lot more sense now. I think I have 5 companies in the commodities piece of my portfolio. But ArcelorMittal, which is one of the most dominant steel producers in the world, it was a large cap company. It's one of the reasons it made the most sense to me. Everything made sense, from the stock analyzer to the 8 pillars. There wasn't as much that needed to go into it and understanding the nuances. It's finding those type of opportunities to get yourself going that Dalton will help you with, that, you'll learn from Paul and Dalton. You'll get both sides of this like spectrum of value investing and how you approach it from a net asset value versus a discounted cash flow.
Can we go look at just the market being down before?
Oh, absolutely.
Before we go.
So let's finish the stock analyzer right here really quickly. Multiples. Here's a mental model for this. Ben Graham talks about it in Intelligent Investor. It's a very back of napkin version, but it's 8.5 plus 2 times G, and then there's an interest rate factor in there. But that would mean that if it's declining 2% a year, you'd be looking at a multiple today that is probably more like 5 to 6 times, which would mean that current price is probably fair. So let's go with let's go with 5 on the low end. Let's go with 8 and 11. If they really can't continue to grow like this, I think 11 times earnings and cash flow could be fair. Let's drop that 9% return in there. Click analyze. I mean, guys, now here's the thing. Figure out if it fits your process, right? I just talked about the fact that for my own personal portfolio, I have different groupings of how I approach my portfolio. There's different types of company in it. There's certain parts of the portfolio that HPQ obviously wouldn't fit. If I'm looking for the highest quality business that's going to grow and compound over long periods of time, this is not that company. But if you're looking for value, this could be a company, right? These returns look potentially attractive. It's also a matter of opportunity cost, right? If you only have a certain amount of money and you have to choose between HPQ and 10 other options, putting money in your 10th option will take away money from your first option. So that's kind of math and research that you need to go figure out. Let's take a look at the market, because for the first time in forever, it hasn't just rebounded instantly. So S&P is down 1.4% about, thank goodness. The NASDAQ 1.63%. Bitcoin is back below 70,000. Never thought it would fall below 70,000 again.
Exactly. Last time to buy under 90,000.
Yeah, this will never happen. You will never see Bitcoin below $90,000 after today. Not actually. That is completely
That's a joke. The Winklevoss twins.
Yeah, that's what they'd say, right?
Yes.
Russell, all the indexes are basically down between 1.4 and 1.6%. Guys, that's awesome. I've heard this analogy. This is one of the first analogies I probably ever heard, investing wise. I think it was a Buffett or Munger lecture, probably 5 or 6 years ago. I was listening to a video. The stock market is the only place, where when things go on sale, when they go on a discount, that people don't get excited, right? I was shopping for golf clubs. Man, what was that? A week ago or so. They were $800 at the store, and when I went online, the same exact clubs were $675 or whatever it was. It was just a set of irons. And what had happened to me, I was in the car with my dad, we fist bumped. We were like, let's go. That's awesome. Just saved $125 that can be spent elsewhere, got it at a discount. Same thing with stocks though, right? As the market falls 2%, people go from this when it's up to that when it's down, right? They get all sad, they get upset. The more the market falls, the more people get scared. The price fluctuation has nothing to do with how these actual companies are performing right now. Yes, every 3 months, maybe something will be said in earnings that actually impacts the fundamentals of the business and your projections long-term. That could impact value. But if nothing's coming out about the actual business between this period right here, there's nothing that should really concern you, right? You own a piece of a real business. It's not some game, right? It's not just some ticker symbol that goes up and down like this. You own a real business. All that matters is what the value looks like over time. And you want to buy with a margin of safety, which would mean that maybe in that scenario over the course of 5 years, you have a great company that you want to own. Maybe it's Costco, maybe it's Coca-Cola, Visa, MasterCard, Microsoft. You know where you want to buy. And all you have to do is be disciplined and be patient, and you'll do well over long periods of time.
Sam, I just dropped your link in the chat. Awesome. If anybody needs to book a call with you, has questions about the foundations class, but even just about the community and maybe want to know more about it.
Yeah, absolutely. And I see a comment from Be Fine. We're not going to cover it today, but there was an exclusive content on CF recently. I've talked about people within in the community about it. That's the beauty of the community, right, guys? You actually get to make these requests and see us do our analysis on it. It's really high quality business and it's a really interesting business. So definitely worth doing more research on. But the link is there. Sign up for a call with me if you want to talk to me. It doesn't have to be about the class. I'm happy to talk to you about whether or not being a part of the actual community. And again, it's not you signing up for some software, right? You're becoming a member of Everything Money. We don't want people who are going to sign up for 1 month and then leave. We want people who are going to be lifelong members. We want you to be part of the group. I want to actually get to know you. Dalton wants to get to know you. The other community members get to know you. We talk about things other than investing too, right? Like we talk about fitness, we talk about our workouts. I was having a conversation about fasting the other day with people, and part of being an investor and a great investor is how long your runway is, right? Like one of the reasons Buffett's so successful, if Buffett died at 60, almost no one would ever have heard of him. He would have, passed away with 20, 30, 40, $50 million. And instead he's worth over 100 billion because he lived till 95. So it's those kind of conversations, guys. So come get to know us, sign up for a call. I'm ignoring someone's comments. Flower foods. We'll cover them in the community. We're running out of time today. But I appreciate all you guys for watching.
Your next live stream's next week.
My next live stream
on the 17th?
17th.
Yeah. So on the 17th,
I will go live.
Bring flour.
Yeah.
And
bring flour foods. I will talk about it. Actually, I think somebody actually brought that up in the community meet the other day. So we will check it out on the next live stream. I hope to see you there. Thank you guys all for listening.